Futures pointing lower this morning, awaiting retail sales data. This is what you need to know before the bell. We discussed yesterday that it was likely the markets have started a correctional phase that could last here for a couple of weeks or so now that we've triggered that MACD sell signal from a decently high level. And the point here is that markets have had a very large run here. There's a lot of stocks up 50, 60, 70, 80, 100% from their lows in October. Over the course of the last 3 months. And that's really been just a function of a lot of speculative nature returning to the markets. In fact, if you take a look at the American Association of Individual Investors, they've had a big decrease in cash holdings and an increase in their equity holdings just over the last couple of months. Professional investors are getting very bullish on the stock market as well. Their sentiment greatly improved. Technical indicators are moving up into more overbought levels as well. But this correctional phase that we're in is not uncommon, and we've seen this before. If we go back and look at previous peaks in the markets where we had a MACD signal, it wasn't surprising to see the market kind of churn sideways even after you were well into the sell signal. Markets kind of consolidated a bit before they actually broke and went lower. We even saw that back in the July-August rally where the markets did trigger a sell signal. The markets had consolidated a bit sideways, even rallied a bit after the signal before actually trending lower. So again, it's not uncommon to see markets trying to hold into place as you get these early sell signals. It takes a little bit of time for that sell signal to catch up with the markets. But again, the one thing to pay attention to here is really twofold. One, upside of this trading range is likely fairly limited for the time being as the sell signal starts kind of working through its process. So again, there's not a lot of upside here. Again, if you're looking to take on additional equity risk, be a little bit patient here, wait for a bit of a pullback, and that'll give you a better entry point to put money to work for the next phase of the rally, if there is going to be one. The other side of this, of course, is that this rally may have peaked here and we may have a bigger decline, and we won't know that yet. So this is another reason just to be a little bit more cautious while we work through this. Retail sales coming up, and that's expected to be fairly strong because of what we saw in the January card spending data. But again, there's so many other factors that pin into that. A weaker than expected retail sales numbers will suggest the economy slowing a bit more than people expected. If retail sales are too hot, this is going to be the challenge for the markets. If retail sales come extremely strong, that's going to suggest that there's too much activity in the economy. The Fed's going to have to keep hiking rates. So that's going to potentially lead to a pretty sharp tick in the markets in one direction or the other. So pullback here will give us a better idea of when and where to add to our equity risk in portfolios. I'm Lance Roberts, and that's what you need to know before the bell.